Good morning, welcome to Trade Live with IG. We got Mini Cooper in the house, people.
Thank you very much for having me, Rich. It feels like I haven't been on here with you for ages.
You and I, it must be at least 5 weeks, I reckon.
That's because you abandoned us for Milan. That's what it was.
That was it. And then you were busy on holiday as well.
Yeah, I had a bit of holiday.
Now, talking about holidays, Mini Cooper.
Talk to me. Talk to me.
Everybody, Angeline isn't feeling well today. Well, when I say holidays, you know, obviously I meant, sorry, Angeline is off sick today.
Oh, okay.
So she won't be on the show. Now, I'm not suggesting that everybody should send her get well soon emails and fill up her inbox, but angeline.ong@ig.com. Definitely do not ask her any really complicated questions about shows and make her spend the whole morning replying. Get well soon, Ange.
Can we go one better, and can people send a video, not just an email, but with a video attached?
Of themselves?
Yeah.
Asking the question.
Asking the question?
Yeah, good one.
I was thinking get well soon. What were you thinking?
Oh, okay. Yeah, let's... So, Little Wabbit, that's a new one. Good morning, Little Wabbit, saying you're announcing yourself to the chat. Very good morning. Like that. Neil Brewster, good morning to you. The most musical intro to a financial show. That's right, we're way better than CNBC there.
Of course we are.
CNBC's been the same intro for about 20 years, I think. Now, let's have a look at what is coming up on today's show then. We've got myself and Mini Cooper through till 8:30 a.m. And then I've got Matt Arborin. He's talking, Matt and I spoke at the bottom of the market. Now we're talking at the top of the market. And then, Mini Cooper, what have we got after Matt Arbour and I are chatting? At 9 a.m, the all sessions.
So we have got all sessions opening bell with yourself, and then we've got Mr. Agnick and Graham Dixon at 9:10 with Experts Edge.
Who's one of Ronnie's clients.
And then finally at 9:35 we've got Gabriel and yourself.
That's right, but I am going to be jumping in and speaking to Graham as well, because we are going to be talking about small and mid caps.
Lovely.
In the UK, which I know that quite a few of you have a lot of interest in. So, right, we'll dive into it.
Where do we start? Yeah.
So you and I have got plenty to talk about because it's someone's birthday tomorrow.
What'd you get me?
Mine.
What'd you get me?
Well, I haven't got you anything yet.
What? Is it a surprise?
Well, your age is a surprise. Let's have a poll of how old is Mini Cooper tomorrow? I think potentially, well, let's see what producer Phil comes up with.
He's going to come up with some dodgy options, I can tell.
No, we'd never do that to you. Never. So yeah, if you think you're watching Gary Stevenson, then you're not too far wrong. But Mini Cooper, how old is he going to be in his birthday? So producer Phil's going to pop that poll up now as we go into overnight action.
Let's have a look.
He doesn't know what the right answer is, so he doesn't know what to put. Right, well, the market's laughing. The market is absolutely laughing at Trump once again. South Korean stock market is up 1.7% overnight. That's what they think of this delay in tariffs. Let's have a look at CNBC's wonderful graphic. There they are. Run us through that. Mini?
So, yeah, new US reciprocal tariffs. We have got Japan and South Korea at 25%. Wow, this is testing my flag knowledge.
There are some really tough ones up there, I'll give you that.
So yeah, Japan and South Korea at 25%. We've got South Africa at 30%.
If you can get any of the others, I will be impressed.
Right, I want to say Vietnam.
Yeah.
36%.
Well done.
Tunisia, 25%.
Ooh, you pulled that one out.
Is 35%, is that Bangladesh?
No, I think that is Slovakia.
What? The red dot with the green background?
Oh no, so the red, blue, and white stripes. I believe that's somewhere around. Well, from the old Czech.
I want to say Cambodia's on there.
Yeah. Well, I don't know the rest
I
of
say
it.
that's the best I can do.
Yeah.
I used to be good from playing FIFA when I was a kid because it had all the flags on, but I don't play anymore.
There you go, the skills that you picked up there. But yes, the markets in Japan are up 35 basis points.
Yeah.
And the South Korean market's up 1.7%.
Yeah.
So yet again, he has choked. He's forgotten about this deadline tomorrow, and the new deadline is August the 1st. And
I was going to say it's mainly due to the fact that Trump said that, look, this is still open to change. It's not set in stone, which insinuates there could be potential for a new deal.
Exactly.
He came out and said, look, we've done a deal with the UK, China, and it looks like we're doing one with India very, very soon, which is great for the US, given that obviously China and India are some of their biggest trading partners.
Yeah. That's right. So India, a mini deal is expected in the next 24 to 48 hours. That will be for 10%. So 10% is expected with India. Thailand has offered concessions to make a deal. South Africa say they're committed to constructive talks on tariffs. Indonesia say the trade deal will include buying soybeans and energy, as well as corn. And then Europe seeks a 10% universal tariff with some exceptions for autos. But the US is threatening a 17% tariff on EU food.
Interesting. Because I was watching CNBC last night on YouTube, and they were saying how... Sorry?
With the Besant interview?
It was literally just a clip of like an overview. It was like 9-10 minutes long, just summarising about the tariffs and what Trump had said so far. So they were saying how Nissan and Toyota were initially down, car makers.
Yeah.
So I thought that was quite interesting due to the fact that when all the tariffs were initially set by Trump, which was April the 2nd, right?
Well, yeah, we
a lot of the car stocks were heavily impacted due to the fact that a lot of their production, let's say, is in Mexico or in Europe, and yeah, they got absolutely hammered.
Yeah. So what has that done to the futures then? Well, we saw the US sell off rather heavily. The US S&P down 80 basis points yesterday. NASDAQ down nearer to 1%, as was the Dow.
However, it's come back a little bit since.
Yeah, we got a small bounce after a relatively volatile session. Oil continued. We couldn't work out why oil was up 1% in the morning yesterday. It was up 2.5% by the end of the day. Extraordinary. And then we had the bouncing gold, of course, all the trees there. An Irish gold price this morning. And then Bitcoin. There is just no volatility, or touch wood, but there's no volatility in this, this Bitcoin price at all. It's incredible. Right, Minnie, what have you got for us this morning then?
This morning?
You've been doing a lot of work there, squirreling away.
So let's talk about a story which came out yesterday afternoon. This was around 3 or 4 p.m. whilst I was on desk. So I'm just going to read a little small section out from Bloomberg. So CoreWeave to buy Core Scientific in roughly $9 billion US deal. So in an all-stock deal worth about $9 billion that will allow it to expand its artificial intelligence data center capacity. The transaction values Core Scientific stock at $20.40 per share, according to a statement from CoreWeave. However, that represents a 66% premium over the closing price on June the 25th, and the deal is expected to close in the fourth quarter of 2025. Now, there's some serious movement in the charts there, isn't there, Rich?
Look at
serious movement.
What an IPO. It's gone from $40 to 160.
Nuts.
I mean, that's almost as good as SWC.
You're never going to beat that one.
Right, here we go then. Here's breaking views on the deal. How's your eyesight, Minnie? Do you want to try to have a crack at reading that out?
Let's go. So when it comes to benefiting from the national artificial intelligence boom, CoreWeave and Core Scientific are joined at the hip, combining the two, which together provide data center infrastructure and sell computing power to AI developers, makes sense. The merger, unveiled on Monday, puts a $9 billion price tag on Core Scientific based on pre-announcement share prices. The problem is that the top is boringly concrete. testing valuations that have been bid up in the ecstatic market frenzy.
Wow, as we said. So yeah, CoreWeave, of course, up 300%. Excuse me, valuing at 75 billion. Not sure I'm brave enough to get involved in the options market in this one just yet.
Lot of vol. And I was going to say, if clients do have any positions in this, of course, it's traded in the main session on our platform, so therefore between 2:30 and 9 UK time. But if you did want to get in on that, you can always call in our help desk number, and we can trade in the pre-market, which is 9 till 2:30, and from Monday to Thursday, the post-market is from 9:30 till 1 in the morning, and on Friday, just up until 10 p.m.
Oh, good knowledge. Right, so what's the conclusion on this deal? The deal makes sense, but it is a troubling reminder of the potential downside, right? After their huge surge in the CoreWeave share price. The deal makes sense, but is a troubling reminder of the potential downside. So
it was a 66% premium over the closing price on June the 25th, which a big premium.
Wow, that certainly is. Jeez.
And they've come out and said this acquisition accelerates our strategy to deploy HI and HPC workloads at scale, said CoreWeave's CEO.
Okay, so there we go. We can see Core Scientific is the orange price and CoreWeave is the blue price, and there is the share price performance relative to the S&P 500 just in June. So yeah, good. Right, chart off. Thank you, guys. Now, good morning to Avi Fine. How are we doing? Good morning, R6 Sena. Now, R6 Sena did Axel manage to do your Vodafone chart yesterday, because that was one I saw you ask the question. And I'm worried it was ignored. We can't be ignoring our core stock. My number one holding. I didn't see the Vodafone technicals yesterday, so I will try and get an answer for you on that.
I was going to say, I've got a shout out there from Silver Surfer. So a big shout out to Luke for helping me set up my Tasty account yesterday.
This Luke?
Yeah.
Really?
You sound surprised.
Well done. You get a wee tick in the box for that. We'll get
Put that in my performance review. Thank you, Silver Surfer.
Is it time for performance reviews?
They are every 6 months. The next one will be, we've recently had one. The next one will be in around 4 or 5 months. Yeah.
Well, you come to me. I'll do a performance.
I don't know if I trust you, to be honest, Rich.
How would I ever wind you up? Right, how old's Mini Cooper tomorrow? 26 years old, doing all right. Say 60% of you. Only time will tell for Padwan.
Who said 32?
32,
That's 7% of people. That's like 4 or 5 people.
I think that's
no, it's not. It's around 2 or 3 people. I thought there were 60 votes over. That's why I said that.
Not happy with that, are you? 3 people think you're 32.
Yeah.
Right, go and give them the answer then.
26.
Oh,
26. Yeah, I'm going out with my family for dinner.
Tonight or tomorrow?
Tomorrow. Yeah, I've got the day off. Yeah.
Where are you going to go?
My grandparents live in Cambridge, and it's hard for them to travel, so I want to go up there.
Ah, very nice.
Yeah.
And so are you on the lates on Thursday then?
I am on the late on Thursday, yeah.
Nice.
Yeah.
Well worked. Right, good morning, Kate Murphy.
Morning.
Everything well? How are we all doing today? So FTSE's looking down 10 basis points. Of course, we've got our deal in early on the tariffs. We've got no problems, do we?
Yeah.
But let's have a look at what the front page of the Sunday Times is. Sorry, not the Sunday Times. The Times is saying today. Well, they've got Uncle Donald there. With his original, I mean, that's just become a meme in itself, hasn't it? The board. So yeah,
tariffs. Love the tariffs.
There they are. And what bill did you get through last week, Donald?
The one big beautiful bill.
It's brilliant. Dear me, I mean, where do we go next? What is up for us next?
Didn't he forget like the president of Japan's name?
Mr. Japan.
Mr. Japan, that was it.
Japan.
Or Mr. Japan or President. Crazy.
What do you do if you forget a client's name?
Well, that's a massive use of fact. When we speak to a client, Salesforce comes up and it displays like the client's name, address, date of birth. Yeah. And beforehand, we have to do security unless we know the client.
Yeah.
So therefore, they know that we know their name and the details about them.
Right. God, it's terrible forgetting people's name, isn't it, Ronnie?
Whose name did Ronnie forget?
No.
Well, I'm stoked this morning. I haven't had breakfast.
Right. We've we're having a look at the times. Let's see if I can get logged in there. But we have got the a very positive article that the cyber attack gives Marks and Spencer's an opportunity for a reset.
That's odd.
The chief executive setting out that for me is like, oh, this has really affected us. And from what I hear, continues to affect them.
I don't really understand how it can be a positive. I don't know why they've come out and potentially tried to hide the scale of it, but really what it shows is that they need to invest more in cybersecurity.
Yeah.
That's simply what it is.
Is that an area that you would imagine the sort of the market to be focused on increasingly in the future?
Yeah. I think it's a really big thing, and also linked to that, I think, is Bitcoin and the blockchain, which of course is very, very secure. Obviously, we have had talk about quantum computing potentially being able to break the code, but I don't know if that's a thing in the near future. And you've also got to consider that they can still improve the blockchain. They still have time to actually improve the security of it. So I think cyber security in the future is going to be a really, really big thing.
I think that's probably quite an interesting poll in itself, actually, if producer Phil wants to get tapping away again. So what do you consider the most interesting future, not concept, but area to invest in? Is it cyber companies? Is it quantum computing?
Yeah.
What else we go for?
Drones.
Yeah,
like
defense.
Defense, yeah. That's going to be a big thing.
It's a very current one, though. I wonder if it's, if we're talking about the next one, I wonder if that's a little bit too far. And nuclear stroke.
I also potentially think Bitcoin as well, due to the fact that it's decentralized.
Yeah. Let's go with those four. So what area are you most interested in an investing sense, out of those? Cybersecurity, nuclear energy, stroke uranium, quantum computing, and
Bitcoin.
Gonna go Bitcoin.
Yeah, or like decentralized, like a decentralized future.
Okay. Right. Let's get that up then. And with regards to the Financial Times, we've had a look at the Times. Let's have a look at the Financial Times as well. Of course, it's the big Trump story, and then the surprising success story of British fibre broadband. Here we go.
Didn't know about that. Do you think that come August the 1st, let's say a few weeks before, Trump's going to be like, look, we're going to extend again? Because obviously it was due to be tomorrow, when the tariffs from April the 2nd were going to go back in place, because he could potentially extend it further, right?
Yeah, absolutely.
We just don't know.
But this is what makes such a joke of it, is that he thinks he can just come along and put a new date in, put new threats out, and everybody's just laughing at them.
It's crazy. It's crazy.
So, market clearly ignoring it. Chart off, thanks, guys. Market clearly ignoring it at this moment. Is it going to get a shock at some point? But the most important thing is that this takes the effective tariff rate, forget all this rubbish of the 25% and everything.
Yeah.
If you go to the logical end, it takes the effective tariff rate on the world from 6% to 15%.
Wow.
That is going to have some impact.
7.5 times jump.
Yeah.
Yeah.
That is really going to... You also had a look at Apple, didn't you?
Yes. So I've got another little snippet from Bloomberg here. So Apple loses top AI models executive to Meta's hiring spree. So Apple's top executive in charge of AI models is leaving for Meta Platforms. Another setback in the iPhone makers struggling at AI efforts. It is Roaming Pang, a distinguished engineer manager in charge of the company's Apple Foundation Models team, is departing, according to people with knowledge of the matter. Rumored to be paid tens of millions of dollars.
For a sign-on.
Yeah,
So
wild.
these executives now in AI world, because if you miss this whole opportunity, or if you fall behind, you're talking about hundreds of billions of dollars of missed opportunity.
Yeah.
So they're paying them up to 100 million for sign-on to attract them to the.
I was reading stories how Apple are actually paying their workers not to go to a competitor, like not to work for like a year or two, so they don't go to a competitor.
Yeah.
Obviously paying millions of dollars as well, which is crazy.
What's your vote out of those four then? Cybersecurity, quantum computing, nuclear, or decentralized finance?
I'd have to go Bitcoin, like decentralized finance.
Right.
Yeah.
And why is that? What do you think the future holds?
Yeah, so it's the fact that it's actually decentralized, because obviously at the moment you've got, let's say you've got PayPal, you've got the banks, you've got all these intermediaries, and the fact that Bitcoin actually removes that. Obviously you do have some drawbacks, such as like with mining, it takes like a huge element to actually mine Bitcoin. So for example, it's like a proof of work blockchain.
Yeah.
So that takes a lot of electricity, which you could argue isn't necessarily sustainable for the future. But I think with Bitcoin, it's really, I can see it going to $1 million.
Whoa.
Yeah. In the long term.
It's exactly what Andrew Webley said last week as well. He said he's not going to give a projection, but whether it's 1 million or 3 million or 5 million.
Yeah.
That was his. Yeah. I was like, not going to give a projection, but those are pretty punchy. So now we mentioned Smarter Web there. I did mention that I bought them yesterday. What I missed is that, unfortunately, we don't get a huge amount of time before the show to go through RNSs.
Exactly, yeah, because what happens, for those of you who don't know, that the RNS comes out on the LSE at 7 in the morning. So as an example, this morning, not that I had much to send out due to the fact it was quite quiet in the UK today, is I'd send out, for those clients holding those stocks, okay, I'd send out the news, the RNS, or the BFW, which is like a summary, which comes out on Bloomberg. Yeah. And it's usually easy to read in the RNS, because it's normally like 10 or 11 bullet points. Whereas like an RNS could be like a whole annual report, which is like 60 pages, which clients don't necessarily need.
Do you want to just explain what an RNS is?
Yeah, so basically it's a summary, which is usually quite in depth. Obviously, those stocks which have like a larger market cap, and there's more to talk about, such as like FTSE, and the FTSE such as like Shell, BP, AstraZeneca. Then there's a lot of information such as like statistics, such as quarterly reports or updates from the board, CEO, things like that. Whereas the BFW is just a summary of what happened in the RNS. Right. The RNS would always come out at 7, and the BFW would come out slightly after, like 10 past 7, quarter past 7.
Okay. So yeah, there was 2 announcements from Smarter Web yesterday. I just went to the first one, and the first one was the Bitcoin purchase, right? That took them up to 1,000 Bitcoin. What I missed, that there was the ATM. The first ATM's done. So 22.9 million sterling he's taken in from the ATM, much faster than it was expected. This was meant to take a month. And I think that's about 2.5 weeks to 3 weeks that it's been done. So that's a reminder. What the ATM is, of course, at the money, right, is every day, it's almost like the reverse of a buyback. A buyback is when a company goes in and buys its own shares. Yeah. In this ATM, the company issues 7 million new shares, gives them to a broker, and then over the last 2.5, 3 weeks, they've been selling them in the market every day. Max 20% of volume, and you cannot sell them lower than last night's closing price. As I say, this was meant to take a month. And the proceeds of nearly 23 million, of course, now get transferred to Andrew, who then goes and buys Bitcoin with it. However, what he's also announced is that he's just issued another 14 million shares. We have now allocated the remaining 14 million shares to the arrangement. We will update the market promptly with the total proceeds. So that's 14 million. Let's say the stock goes down to £2.50, right? £2.50 times 14 is another, 35 million sterling.
Yeah.
He's going to take in to add to the proceeds.
Yeah.
So
it'd be interesting though, because Bitcoin at the moment is at $108,000.
yeah, shall we have a look at Bitcoin?
So it'd be interesting to see what happens to SWC's share price if, let's say, it goes down to $90,000 or $125,000.
Absolutely.
Yeah.
Yep.
I mean, Bitcoin could even go back to like 75, 80.
Because it has done in the past.
Yeah. Because normally it's like cycles. But
Yeah.
a lot of people are saying, look, it's not the same as the past due to the fact that we've got institutional adoption. And of course, Trump as well, being the US president who's really, really, really backing it.
Yeah. But the important point from this is we all had a calculation in our head of what SWC's MNAV was. Right. So he's just added 22 million to the cash, which now that must take him past 1,500 Bitcoin. But if you add the 14 million shares, which are now in the share count, so that takes it to 256 million shares issued, and you fast forward a month, 5 weeks, if he receives that other 35 million sterling, you get him up towards 2,000 Bitcoin. So yesterday he was the fastest company ever to get to 1,000, but with the announcement that went alongside it, then he's on his way to 2,000.
I wonder how quick MicroStrategy will, because this is basically like a mini MicroStrategy, but of course in the UK instead of the US, right? And obviously MicroStrategy has done exceptionally well because they basically issued debt, which is, I believe from memory, due to expire around 2028, and they use that debt to buy more Bitcoin. And I think that what it is that debt, they can potentially convert it into equity for MicroStrategy shares.
Yeah.
At a specified level.
So if the stock goes up to $1,000, then they've got equity instead.
And they've done very, very well out of it. Obviously, you can see for their share price.
So yeah, so that was just an interesting one there to keep an eye on, because now, by my calculations, if he does one more raise of 50 million sterling, then we're back below that 4.5 times MNAV. And that traditionally has been where we've started to see the share rally. So it's an interesting one. Right, it is 7:58. We're going to go to a quick look at today's chart. No, we're not. Right, we're good. We've fumbled it. We've talked too long. Mini Cooper chats too much. So we're going to do this. We're going to do the chart of the day after the London Stock Exchange opened. So, Mini Cooper, what are we looking at on the open this morning?
Yeah, so like I said before, quite quiet in the UK this morning. So I'm on the RNS page, and we have got Victrex PLC with a Q3 trading update. We have got SIG PLC with a H1 trading update. We've got Begbie's Trainer Group with final results. Begbie's.
Have you seen Train Spotting?
I haven't, no.
Right. Well, in that case, I'm going to do the rest till the market open in the voice of Begbie. Right. Let's go
voice
to the opening bell, Mini Cooper.
Let's go for it.
Right, get your bell in your hand, sir. You ready?
It's down here.
The last day of his 25-year-old Mini Cooper. Let him open the London Stock Exchange.
Oh my!
Have you just broken
I think
it?
something's just fell out. Might have to buy a new bell now.
Right, well, so
Take out my paycheck.
for Mini Cooper's birthday, he is going to buy us a new bell. Right, what have we? Oh,
I saw Entain, Entain up 4.5% there. We've got Persimmon, well, 5.58% now. Persimmon's up just over 2%. We have got Wizz Air Holdings up 0.83%. We've got HSBC up 37 basis points. We've got Barclays up 24 basis points. We've got BP up 0.16%.
Shall we have a look at the losers on the day?
Look at the losers. So, yeah, we've got M&S there, down 1%. Obviously, we were talking about them earlier with respect to the cyber attack. We've got, I don't know how you say this, Canal and Sadir, down 1.34%. We have got the one and only Vodafone, down 35 basis points. Is that a tear down your eye, Rich? We've got Barclay Group down 0.22%, Tesco down 0.17%. We have Pearson down 0.47%. And Whitbread down 0.17%.
Right, shall we just check Entain?
Yeah, what's happening with Entain?
What's out there? Right, what news have we got? Oh, there's nothing out.
Interesting.
I guess there must be an upgrade or something around then. Let's see. Do you want to just hit Ronnie up? And,
let me message Ronnie.
Good stuff. Right. So I'll go through European moves while our man Mini Cooper is doing that. We've got Bayer up 70 basis points. Rheinmetall back over the 1,800 euro level. Rheinmetall continue to rally there. We've got Gucci up 40 basis points, 196. Hasn't managed to touch that $200 and stay above it just yet. Siemens 218 euros. But let's see the losers on the day after those tariff worries last night.
We've got Puma down 0.7%, Porsche down 0.52%, got Adidas down 0.38%, we've got Nestle down 0.33%, L'Oreal down 0.39%, we've got Air France down 0.3%.
Good. Here we go. So, thank you, Trading Days. The Bank of America, that raises Entain to a buy from neutral with an £11 price target from £8.80.
Wow, that's a big jump.
That is why it is so strong. So their price target, 12 months, remember, 12-month price target, not 1 day. It's going to 11 quid. Bank of America think. That's an interesting one, isn't it?
Yeah, I don't know too much about Entain, so I wouldn't really say I'm in the right place to comment on it. But yeah, when it first came open, it was just under 5%. So yeah, very, very bullish, particularly compared to the other UK stocks. And we saw with DAX earlier how really none of them were up on the open by more than 1%.
Yeah. You much of a gambler, Mini Cooper? So this was Ladbrokes. Party poker.
Not in terms of
sporting bet.
Not in terms of sports betting. No.
No. What about in the casino?
No, I mean.
Have you ever been to a casino?
I'd rather, like, how should I say this? Put my money, which I'm willing to lose, in like altcoins or something like that.
Ah, okay.
Yeah, rather than gambling. The reason being, so I think with casinos, at the end of the day, they're always going to win. That's why they exist, right? And a lot of them do very, very well.
Yeah.
So from that perspective, that's why I don't really do it. Whereas with...
So would you back the bookies then?
Yeah. I mean, it's a good business model. They always win. Because if not, they wouldn't exist. And I always see, like, as an example, like coral. Like, I always see like a coral and no one's really ever in it. No one's really.
The bookies on the high street now. I don't really understand.
I don't understand why. Maybe it's just for image.
Yeah.
Because I assume that they make most of the money online due to the fact that they don't actually have to pay rent. They don't have to pay staff to work in the shop. Also, they've got to pay staff to maintain the business and price the markets. But that's my perspective.
It's certainly not holding the 4%. So that was too much. It's only up 2 now. Persimmon up 1. And then where are these mining stocks today? I haven't seen. Let's have a look at commodity. There it is. Glencore up 1.6%, £3 and twopence.
You do love your mining stocks, don't you, Rich?
Got to love the mining stocks. Antofagasta £19.20. And yeah, so shall we have a look at commodities then, old chap?
Let's have a look at old chap. I'm still 25, you know.
Only for a day. Are you worried that you're moving into your late 20s now?
Not really, no.
No, doesn't concern you.
No.
Young, free, single.
I'll be fine. It's life.
In a great job.
It's life.
Earning the cash.
With you here on Trade Live with IG.
Where would you rather be?
Life couldn't be better.
Well, your life could be better if you were along some silver this morning. You'd be up by 20 basis points. But platinum 1,380 back. Platinum's been the one to be in the past few weeks.
Can we bring up the price chart for platinum?
Oh, do you want to see how well this is done? It's been incredible.
I love a bit of movement.
I'm not going to go there.
Right.
I'm not going to rise to that. Right, here we go. Here's your platinum movement. That's up 38% in 6 weeks.
Impressive.
That really is, isn't it?
Yeah.
So the market clearly hunting for places where there's still value, because when you've got S&P at all-time highs, you've got the AI story is largely played out for the short term. You've got to find new places where you're going to make some money.
It's going to be growth. And I think one thing to keep in mind is when you have volatility such as that, like 38% in 6 weeks, that is a lot and a much more than what like a stock index would be, for example. So therefore, what I say is, with respect to risk, is just have enough funds on your account to ensure you're not margin called. As a retail client, you are in margin call when your equity is less than 100% of margin, but you're actually closed out when equity gets to less than 50% of margin. Yeah. So it's just one thing to really keep in mind. Ideally, you don't want to go into a margin call.
Oh, they're horrible.
Yeah, exactly.
Horrible.
And they're more likely when there's more volatility, of course.
Of course. So. Yeah, no, very well said, sir. Very well said.
Thank you very much.
We'll let you off for breaking the bell for that strong message that you've delivered. So let's have a look at the results of our poll then, because talking about where do you put your money next? Where does it go? Well, it's a very mixed bag. That's really interesting. Nuclear, I did buy, both Angeline and I bought into the uranium ETF yesterday. Just a little bit. Just teasing a bit of my cash back into the market.
Is that a long-term hold, you thinking? When I mean long-term, I mean years.
Yeah, I think that one has to be. It's more to start to build a position.
Right, okay. So you're going to like dollar cost average in, build your position, get more exposure like that?
To the theme, I think so. Yeah. Quantum computing would be the complete opposite. Zero interest. Yeah. Absolutely. I would not touch those.
I was reading at this current moment in time, based on Bitcoin's level of security, that quantum computing wouldn't be able to do anything now. However, it potentially could in around 15 years.
In 15 years. Well, to be fair,
but anything can happen. You never know.
Jensen has gone from 15 years to 10 years to 5.
Oh, okay.
So when you're talking about something in 5 years' time, then it just depends. Because if Elon says 5 years, then it's 20 years. But
talking about.
Well, let's have a look at IonQ first. So this is what we're talking about when it comes to quantum computing. It's made it all back. Right. This was, of course, when Jensen said it would be 10 years until we see anything back in March, but it has done it. So it's interesting that it's managed to get that move back. But will it break to new highs?
We'll see. Only time will tell.
Only time will tell. Here we go.
I was going to say about Tesla there. You mentioned Musk. Did you see how Musk has plans to create his own political party?
Yeah, what do you think of that?
Oh, I mean, no, I don't think it's going to work at all.
No?
From my understanding, he can't even run for it. But obviously, things can change.
Yeah.
And off the back of that, Tesla's share price went down slightly because when Trump...
Slightly? 7%?
Well, yeah. That's
nothing in Tesla, is it?
It did come back a little bit. From my memory, it wasn't that much.
No, it was down 6.8%.
Down 6.8%.
Yeah.
Because when Musk said that he was going to step down from his role in the government, then Tesla share price reacted positively, of course, because then he can focus more on Tesla.
Yeah.
But of course, to this, reacted negatively because it insinuates he's going to spend more of his time elsewhere, i.e. on the new political party.
Not just that, though. Trump will take away his subsidies as well.
Yeah, of course he will.
Yeah.
Of course he will.
It's just, why can't he just focus on one thing?
This was always bound to happen. Ever since Trump got in on November the 5th, people were saying, look, we're just waiting for Trump and Musk to fall out, because obviously there was going to be a conflict of interest.
Yeah. Right, Terence, let's see what he's got for us, shall we? I think this is Terence guess the chart. It's a special one. What country are we talking about? USA. Terence has picked a United States stock for us today.
Okay.
Are we ready? Right, you go throw a guess out there. What Terence has chosen for us today?
What, US stock?
Yep. For guess the chart.
Oh, I've got to think it's something that we've talked about. So I am therefore going to have to go Tesla.
Are you going to go Tesla?
I'm going to have to, yeah, because I sometimes think
I think it's too
quite obvious, yeah.
Let me go to quick. Right, what are your guesses at home for what this is going to be? I will go. Whoa. Maybe.
Sorry, Rich, am I going mad? Are you looking at a price chart?
No.
Okay.
I'm looking at my just the list of American names. I'll go. Eli Lilly will be my guess. Right, are you ready for it? Fastest finger first. Let's see. Somebody beat Hamish today, please. 3, 2, 1, let's go. Well done, Funky Gibbon. Well done. Absolutely nailed it. Moderna.
What's the prize?
The prize is the pride of being the only one, because I didn't get it. Many didn't get it.
No.
We got to let Terence do them again. That was a good.
No, I think that was too difficult. That was too difficult.
Too difficult.
Yeah.
There's not many things that have been that bad. So my guess was Zoom.
Very true, yeah.
I don't know what the price of Zoom is. Peloton would have been another one.
Yeah,
but
I remember Zoom getting absolutely hammered after COVID.
Yep, but that was Moderna.
Yeah.
No. Right. Now, Mr. Cooper.
Talk to me. Talk to me.
Well, first of all, would you be so good as to ask the people for your birthday
Yeah.
to like and subscribe?
For all those lovely people out there, if you haven't already, please do like and subscribe to Trade Live with IG. How many more subscribers? Like, what's our next target, Rich? Have you got like a target?
That's a good call, actually, because we're on 1,207. 1207.
So let's say end of the month, 1,300, 1,350. Sound reasonable?
Yeah, no, 1350 end of month. Yeah, 3 weeks.
1350, yeah.
So what's that? 1,350? Yeah, that'd be decent.
That'll do.
Yeah. Okay. No, so but if you don't subscribe, then please hit that
Please
button
do.
for Mini Cooper's birthday and for poor Angeline at home.
And for Ronnie's birthday is, I believe it's the 23rd or 24th of July, and he's also going to be 26.
We already know what Ronnie's getting for his birthday. How about you save our stock market, Mini?
Yeah, so I've got a tennis ball here. I don't know if the cameras can zoom in or if you can see that. Are the cameras able to zoom in? I haven't got an earpiece in. They are.
Oh, that's good. Yeah, people can see.
Cool.
There we go.
Let me
Put it in front of your face.
I'll say
That's
this. Right, there we go.
I love how you're moving it, and then so the camera's got to follow.
I'm trying to get it
you.
perfect. I'm trying to get like a perfect angle. But because it's on camera, it's like the opposite. So I need to move the ball the opposite way to get it in a good shot. So yeah, save our stock market. So it's a new initiative we have very recently introduced. It's basically to scrap cash ISAs from April 2026. Now, I know Rachel Reeves is going to do an announcement on this on the 15th of July because there was talk even a few months back of reducing just a cash ISA, which is, well, you have an ISA allowance of £20,000 per person per tax year, right? And there was talk of Rachel Reeves reducing this to 4.
So July 15th, is that the Mansion House?
I've got it down here. Mansion House speech, correct. Yeah.
Okay, so that's most likely where it could happen.
Yeah, right. And there were talks a bit low as 4, which I think is quite likely to happen because, of course, the government would technically, well, they'd benefit in 2 ways. Number one is they'd technically get more tax because for some reason, a lot of people like to play it really, really safe and just invest in cash.
Yeah.
Now, arguably, base rate at the moment is 4.25%, whereas like in 2020, 2019, it was much, much lower. So in real terms, given inflation, you would have lost out. So part of
what's the bigger drive is not to have people pay tax and keep cash.
Correct.
What could they possibly benefit more from?
Actually invest in the UK stock market. Okay. So one of our other proposals is for the UK government to remove stamp duty. So at the moment it's 0.5%, which, I mean, it's crazy. I don't understand why we actually do it. Obviously, get it for tax revenue.
Yeah.
But it just disincentivizes UK investors and investors globally to invest in UK stocks.
Definitely.
Because at the moment, I invest, right, and I invest in the S&P 500. I haven't invested anything in the FTSE 100 or UK stocks.
You've missed out this year, haven't you?
Yeah, but
Shocker.
you know, so
Down on the year.
so
In pound terms.
no, but I dollar cost average. So like what I actually do is like every month I put in a certain amount, and then that way, like if I put in like a lump sum and it goes down, I feel.
So what would change you to then invest in the UK instead?
Well, number one, it would be good if they did scrap the stamp duty of 0.5%.
Yep.
Okay. Number two, I think more investment. Like there's in the UK, obviously this doesn't count for like big companies, but let's say with like smaller startups, there's like with like the raises in national insurance which Labour announced, there's no right incentivization because of course with a business you're taking a lot of risk at the start, as most small businesses do fail.
Yeah.
Whereas in the US, it's actually promoted, right? Like the American dream, start your own business. Whereas in the UK, unfortunately, it's not.
I know.
So it's
you need to get real backing behind the idea of investment, but education. That is what is needed here, along with those government announcements.
And that's on the smaller end. Now, on the larger end, we've got a lot of firms who are basically listing elsewhere. I think Wise Payments was recently one of them.
Easy for you to say.
I was struggling earlier. What was I trying to say? There was a certain word, I just couldn't get it out.
Sorry.
Wise Payments was one of them. Also reading how AstraZeneca actually are looking to list elsewhere, which is really interesting.
Considering. I don't think they will, but
yeah, well, considering given that in the FTSE 100, of course, it's a market cap weighted index. Now, I believe they are third or fourth on that list, so they do have a fair bit of influence on the price of the FTSE 100.
That's huge, yeah. And then if BP and Shell get together in 6 months' time, and then they would consider a listing, which of course they won't. I mean, BP and Shell.
Well, let's hope not for the FTSE 100.
Yeah,
but even though I'm not investing in it, of course.
There is not a chance in this world that the government could let BP and Shell, because it's such a big part of their intelligence efforts.
Yeah.
The companies, the management teams in the countries all around the world know more and have better access than the diplomats do.
Yeah, and we've got a good stat for you and all the viewers out there. So, IPO fundraising in London has slumped to a 30-year low, which is not good. That was based on the first half, so the first 6 months, January to June. Yeah, I mean,
all-time high stock markets, and you're getting the worst IPO market in 30 years.
It's crazy. It's crazy. But yeah, the only way's up, I guess. Well, we'll see, but yeah.
He said it. You heard it here first. Yazzie Cooper here. The only way is up. So, right, what stocks are you particularly interested in, whether they be UK or elsewhere at the moment?
Yeah, so I want to talk about Nike, which I know you're a big fan of.
Big fan.
From memory, they reported on the 26th of June, and their share price was up around 15% on the day. Now, of course, 8th of July, if you look at the price chart, ever since 26th of June, it's looking pretty good. Now, of course, Nike's had an awful time recently.
Do you want me to take it a bit further out?
Spill something?
Well,
close.
Just some milk. no tears over it though. Look at that. You'd be crying if you owned that all the way down though. Yeah. As unfortunately my friends who work for Nike have on their share scheme, because they haven't been able to sell any.
Oh dear.
Horrific, isn't it?
And that's why earlier I mentioned, like, when I invest, like, I do like dollar cost averaging. Here, of course, it would be best if you were going to dollar cost average, due to the fact that if you just bought, let's say, the top years ago, then now wouldn't be such a good situation. Whereas if you dollar cost average a small amount of your monthly salary, then of course it's less likely you see that, because you buy higher up, but also gradually throughout time. In this instance, you'd also buy lower down in the hope that one day, like yourself.
But so what kind of trainers have you got?
What kind of trouble? Ironically, I'm wearing Nike Air Forces now.
Oh, you are?
Yeah.
Purchased recently?
4 or 5 months ago.
Okay.
Yeah.
So
I do like Nike shoes, but I think they have fell off a bit, generally speaking, due to the fact you own Nikes.
Yep.
Did the cameras get that?
Both of us got Nikes on.
Did the cameras get that, Rich? Right, so they're getting a little bit higher.
And also purchased 4 months ago.
4 months ago.
So there you go. The
right minds think alike.
Well, if only we'd bought the stock instead of our shoes.
But yeah, I was saying, like, generally speaking, like, what was popular a few years ago.
Let's see your shoes.
Oh, I can't take them off.
There's the. You can take them off. Come on.
I can try and get them on.
Let's have a shoe off.
But I'm going to see how flexible I am. Man. Can they move the camera down a bit?
You get into my shot. So yours are the boring old
Just standard Air Force Ones, yeah.
standard white,
Yeah.
white on white.
White on white, yeah.
See, I'm more of a skater boy than a 26-year-old.
You were like giving like more edgy vibes.
Thanks very much. There we go. That's the first time I've ever been called edgy. So Ranners has got a great point there. A proper options market for UK securities. We can but dream.
Yeah.
Because the options market's just terrible.
Yeah, because
When
I first joined the premium team, I could, in before when I was a grad, I didn't really have access to Bloomberg. I didn't really use it when I was in trading services.
Right.
But when we trade options for clients, of course, we look at these things.
Yeah.
And I was shocked to see how the pricing on UK options for most UK equities was basically static. Like, wasn't really moving, not much liquidity at all. Whereas the US is a complete opposite story. There's so much more liquidity. Yeah. It's just like, I was quite shocked initially when I joined the premium team at that.
Shall we have a look at CoreWeave and just see? I actually don't want to tempt myself into this.
You're going to talk yourself into it.
So CoreWeave, there's the graph, right? So the one that we showed earlier, CoreWeave up 300% in recent months. In 2 months, is it? Yeah, 2 months. It's only got an IV rank of 4. Now, there's not much to go on there. But let's have a look at, if we wanted to do something 45 days out, right? Let's apply Sosnoff rules. Or 38 days takes us to August the 15th. The expected move is $44 on a $150 stock. $160.
Yeah.
So,
Crazy.
let's look down. $100 is 4. Yeah, it's incredible, isn't it?
Yeah.
If you
A lot of risk.
think this stock will not go to $200, and you're happy to buy it at 100, then you take in $7.79. So that is what we're talking, 5% there. Yeah, about 5% for a $200 strangle.
And it was 45 days till expiry.
That one's actually for 38 days.
38 days.
So, I won't do it.
No, it's very risky.
Don't want the headache.
Very risky.
Maybe in one share. What would one share? One option
One
contract.
lot, yeah.
Sorry, a one lot. You get max profit is $780, and your BP would be 1,600 margin. No.
No.
Step away.
No, it's too risky.
What about okay, let's do a defined risk then. What about selling the 170 calls and buying the 185? What do we get for that? We get $2.90. You got a 65% chance probability of profit. Your upside $290 and your downside's 1,200. That's if you think that CoreWeave doesn't go another 10% higher from where it is.
If I were you, Rich, I'd leave it.
Yeah, let's do it.
Not that I'm giving you advice, that's just my personal opinion.
That's your birthday present to me. I'll take that. Right, it's 8:30. It is time for Matt Arbar. We're going to let birthday boy here go back to his desk. What have you got on the rest of the day?
Mainly inbound calls. I do a few call outs. I want to invite a few clients to our premium client trading workshop. So that was what my main
When's the
call-outs.
next one of those?
Tuesday, the 22nd of July.
Right.
Yeah.
Nice.
That's the last one in the office. Then we're going to do online ones from there. So those people who can't necessarily come to the office or who are working in office hours,
right,
and therefore join and make the most of Axel and Chris's expertise.
Yeah. Anyone else? Am I not getting the invite for this one?
No, it was only 2 people. So Pete said to me, look, choose the 2 best. So I chose her.
Right. I wonder why it's been 5 weeks since we've had
rebroadcast. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome back, everybody. Here is the man who can single-handedly save our stock market.
I wish.
We've got Matt Arbour in the house.
Morning, Rich. How are you?
Very well. It's been a long time.
It has been a long time. Usually we're on at times of extreme volatility, and yet here we are.
We've done an interview at the bottom of the market, and now we're going to do one at the top.
Well, perhaps it's kind of interesting in itself. Here we go. We were on in April at the height of tariffs, and now tariffs are crystallising, and the market couldn't care less.
It's a similar announcement yesterday to what we had back in April. We're going to slap 25% on. And down 90 basis points.
Well, Asia couldn't care less about the 25%, could they? It was almost, come and get us.
It's almost surprising that the US hasn't bounced more, considering the reaction in Asia.
Well, yeah, it's. I think it's become a non-story almost for the markets that they're not happening, was discounted as we saw in the rally going on. Germany yesterday, very strong, closing at its highs. You know, the idea this 10% being trailed in the FT this morning, sort of the talk that Europe are going to get only 10% tariffs, which seems an incredible rollback from Trump.
Yeah, we thought we had done better there, didn't we?
Well, it's yes, kind of doesn't make things look too good, but
yeah. And so if we take a look at those futures markets now, so S&P 6,237. How on earth have we got there? What's been the path of 5,300, 5,700, 6,000? I mean, it's just been endless, hasn't it?
It has been fairly relentless. That you take out 1 week, and it's a pretty much straight line. I think it's perhaps indicative that there is still a lot of cash out there looking for a home.
Do you think that's what it is?
Yeah, well, this is a lot of the selling was perhaps professional money, and retail is still coming into the market, and it's still there. And this is global money into the US. A lot of it, isn't it? It's the market that everyone is trading across the world.
Although the dollar wouldn't suggest that you're starting to, or you continue to see that global money come in, I guess.
Well, that is true, and I think you often see that again. This is why, and always talking about it. Your canary in the coal mine is usually what is happening on FX markets. You're getting a different forms of flow going into there. If you want a large, quick position as smart money, you're doing it in bonds and FX rather than equities.
True. Does this? Do you ever get surprised when you see the same vol recovery again and again, or is that just the VIX?
Well, consistently, and then I look at the VIX, and I always think if as that line edges down more towards the low teens, you kind of expect the shock to happen again.
Right.
It's complacency, and then suddenly, and as you know, as I like to say, as we get into August, everyone assumes August is the quiet month.
Yeah.
August is when we tend to get funny moves.
2011 was fun for that, wasn't it?
2011. Rewinding the clock, like last year was fun for that.
Right. It was August.
That was August. That was start of August with the liquidity move in Tokyo led. There's sort of in recent times a lot of sharp down moves that we've seen in August.
Right.
Just as those cautionary things, the vol comes off, everyone assumes an air of complacency, and it doesn't take much. It's very much, are they real events or are they liquidity driven events? It doesn't take much in these markets for a heavy wave of selling, a large seller, and particularly in overnight sessions, for market makers to run away, and we get an exaggerated move, and the panic kicks in.
And it's just kind of nice to ruin the fund managers' holidays in the south of France, isn't it?
well, that is it, isn't it? It's one's an instance of the other. If you don't have fund money coming in to support, it's keeping things turning over, it becomes a different game. But yeah, it's hard to see at the moment, what the story is that sort of changes the dynamic.
Yeah.
There doesn't seem to be a wish for profit taking.
No.
And yeah, the natural selling pressure isn't there at all.
So if it's not tariffs, and it's it doesn't look like the jobs market is suddenly going to collapse. There's our S&P 500. This last bit here, what do you recognize in that pattern? I'll just show you exactly what I'm talking about. This bit here, that is absolutely remarkable. 2, 4, 6, 8, 10 days in a row. Have you seen that many times over your career, or does that still stand out?
10 days in a row. I think I've certainly seen those 10 days in a row. Perhaps not when you're sat so close to all-time highs and sat with the current base. It's not, we're not in a sort of environment where it's a Fed policy, it's a stimulus-led move. This is it seems such a risk-on response. You look at new issues coming out and the bounce we're getting on new US tech issues.
It's the time to go.
Hesitate to say magic money issues. That there is a lot of quick money stocks getting really good bounces, and some undeveloped companies seeing some very large moves. A circle into that. The US one being sort of a great recent example where the stock had. We've come off the highs, but from flotation price to where we are now, and these are things talking in tens of billions of dollars market caps. These aren't small caps anymore. These are kind of large cap stocks, and even when one looks at Coinbase and Robinhood and the tokenization. Okay, it's a great thing. This is finally a use for the blockchain, perhaps as envisaged.
Yeah.
5-6 years ago, this was what a lot of altcoins were proposing, that the tokenization is the way to go, and that was the value in buying some of the altcoins. Is it get you trading rights on all these new wonderful exchanges that never happened. But if one rolls back, one isn't actually getting, and I'm sure some of the chat will disabuse me of this notion, any new functionality from tokenized securities, perhaps. Right. If market makers are willing to price over the weekend, they don't need to do that through a crypto mechanism necessarily. There are other exchanges that would support that. Yes, crypto are kind of pushing the way, but you still need the market makers there to offer the liquidity. Yeah. Yes, the blockchain can facilitate perhaps new exchange startups more quickly, but it's kind of the inherent value and the huge growth we've seen, like the Coinbase moves, the Robinhood moves, underpinned by this belief that tokenization is the next big thing, and this could be perhaps a huge revenue generator. I'm not sure it's the case.
If they came to you and said, right, you've watched the development of weekend markets, what lessons do you think you've learned from the way people behave in the weekend markets that you could kind of give a lesson? Is there any interest in
the way people behave? Well, I think the beauty of an IG weekend market is that it's not a developed market. I think if you're trading those markets, it's gladiatorial, perhaps.
Nice.
In that it's you're dealing with a small pool of money, and it's your view against not the rest of the world, but a closed view of money.
Tens or 100.
Which of course in itself is very interesting. It's like being trading on AIM 20 years ago,
right?
Where it was often a case of the man on the street doing his research knew a lot more than the guys market making, and there was a lot of a run around here that the market makers there offering the stocks, providing liquidity, were behind the news curve.
So it's 2-4 buyer or 3-5.
Yeah. And it was you get different market dynamics in those situations. You move to that other end of the spectrum. You take a Tesla where the spreads are tight, the depth of liquidity is so large. The concept of there being an edge, it's huge pools of money on both sides isn't really the case. But it's interesting, and that's how markets develop. It's interesting to watch the idea of if tokenization sees trading hours extend beyond what happens, and do the large firms see liquidity over the weekend? Is there a demand? Is there actually a demand from retail to be trading 24/7? Definitely, there's a demand from brokerages. The longer you're open, the more commissions you make. It's
there's a demand from me to enjoy my time off at the weekend and sleep.
Well, that's it, isn't it? The respite that one gets from closed markets is quite essential.
Yeah. Really psychologically, the taking a breath at 9 p.m. I'd hate to think of that gone.
Well, even 9 p.m. these days is a misnomer, isn't it?
True. 1 a.m.
1 a.m. and it's back on, but it's true. But as I say, it's interesting that having developed, we've been through 2000, been through whatever Web 1.0, Web 2.0, and suddenly Web 3.0 is still the concept that the blockchain is the new ecosystem that makes things better, is still stimulating new market interest. I find sort of interesting because it's not a new idea.
We have touched on save our stock market this morning. One idea was a proper options market for UK securities. Would there be any chance in the future that we'd get a liquid options market?
Well, obviously, it's one of these questions that's kind of hard to answer. Why it's the chicken and egg, isn't it? Mm-hmm. That the answer, if I'm a market maker, is I'm not seeing the demand. I'm out there. I'm not seeing enough demand or enough liquidity to be offering a liquid market. And there people saying, well, I want to trade UK options. So it's generally what it requires. Such situations is exchanges to believe there's a gap and to incentivize, and to incentivize makers rather than takers, and to get the liquidity driven. But still, that such a thing hasn't developed in the UK yet would suggest that the demand isn't as high as one assumes that it would be.
Quite because it an old school market, or is that nothing?
No, it's one sees alt exchanges develop to trade, even exotics on commodities. There's fairly liquid in trading out of London. Lots of oil options. You trade iron ore options. You can trade a whole variety of options on sort of eclectic instruments, or technically eclectic instruments, and yet top 100 equities. There's not really a fully liquid market. Yes, the market exists, but it's sat there. It's sat there on the wide. The visibility isn't good. It's sort of discouraging people because the spreads you're facing are wide. Yes, you can get filled at the middle most of the time as automated programs are sweeping up anything that comes in, but it's not a market that's encouraging traders. So save our stock market. Options drive trade onto the main exchanges. That's what we've seen in the US.
And let's say some people have got positions in long-term holdings in Rolls-Royce, for example. If they wanted to turn that into a covered call, obviously it's not on the
Everyone's really happy there haven't been calls around to sell on Rolls-Royce over the past 6 months.
Yeah, exactly.
It's weird all have sold the sevens,
all day long. 747.
Yeah.
But if they were interested now in selling a £10 call, do they just phone up and ask for a price?
It's offered. It has to be. It's a minimum size. Because again the liquidity's there. We're not running a liquid book in-house to do it, so it's going into the market. Their prices there. These things are traded on live. There are prices available. It's just not great to pump price through onto the platform and to monitor. But yeah, it's part of the market that it's kind of surprising as life was. If life had still been around, I'm sure we would have.
That's life with two Fs.
Life had still been around. How do we know we're living in sort of a metaverse here, actually?
In the Matrix, yeah, absolutely. Well, Elon certainly is. We've got Friar Tuck saying Tesla and SpaceX need to put Elon and his son on a yacht for an extended vacation with no internet. I was going to mention Tesla there, so I noticed that we've started doing Tesla weekend markets and oil.
Yes, these are. It's sort of. I suppose it's a gauge of what people's interest is across the weekend trading. Obviously, lots of people. Tesla is our most popular traded equity. Right. More people trade Tesla than the FTSE. So
wow,
it's this is a fact. So put it out there. But yeah, it's again. Switching off at the weekend is very important. Do you wish to be watching these things? Okay, if a news story comes out, it's nice to have a line to see.
Absolutely.
But to sit there and think I'm going to trade this number, it's horses for courses.
Yeah. Now we talked about what could be the catalyst to take this market lower. Doesn't look like it's going to be jobs. Doesn't look like it's going to be tariffs, but let's have a look just to see. It's a relatively quiet week, but is there anything coming up on our economic calendar that could trip people up?
Well, the thing that trips people up would be a change in Chinese inflation, in essence. But we don't. such numbers don't tend to shock a great deal. It's numbers you trust. JP's not going to say anything. He's not going to change his tone at the Fed, and dead man walking. So it's, the curve's already playing out down across. There's the gap in the curve across end of his reign.
Is that right?
Yeah, yes. If you look at bonds out, I think it's the June to July diff. It might be July. It always be difficult to see on the platform because there's not pricing across the futures out there. But by all accounts, bond traders are already front running that as the new guy comes in, there's going to be a cut.
50 bits.
Yeah.
Straight away.
So the curve very much changes beyond an incoming.
So yeah, let's switch to those treasury rates there. The 30-year popped up yesterday, which was another reason. Forget the tariffs. That 30-year, if that goes back above 5, that's maybe just the little thing to keep our eye on.
Well, yeah, and I've talked about with Ange before the kind of line. If you are sat there in Asia affecting tariffs, you're large holders of US Treasuries. You can squeeze the US, fairly easily. It's optimally. We've not heard it for about 10 years, have we? Where the Chinese were talking about reserve currencies, moving reserve currencies away from the dollar, trying to get an Asian reserve currency.
The BRICS.
But this is it. The US is in a very strong position as the global reserve currency. As Trump realised that the bond markets can rein you in quite quickly. To distort. If there was concerted action for Japan, China, it's you hold a lot of US Treasuries there.
Yeah, 25% tariff might do that.
Well, perhaps, yeah. And it changed the dynamic very quickly into the States.
Good. Right, Matt, thank you as always. Very, very interesting. Always plenty of value add there. And I'm sure you want to wish Angeline well as well.
Yeah.
And she's watching, of course she is.
She's watching, of course she's watching. What else would you do?
With how ill she is, there's no way she'd be able to watch. Right. Good stuff. Thank you very much. And we'll see you shortly in about 3 minutes for the All Sessions Open.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Bell. Right, welcome back to Old Sessions. Good to get Ronnie locating his bell after Mini Cooper broke it this morning.
Yeah, he did. I can see that. Blimey. Got nothing to ring it with, as per usual. All I'm asking for is something to ring it with, mate.
The big Ron dog in the house as a special treat. So you could have Angeline, or you could have this handsome fella here, but you're only half the man you used to be.
I'm only half the man I used to be. If anyone wants my referral code at Simmer, please reach out. I'll get a 30% discount. Unfortunately, no Zempic, but
yeah, is that what you're really on?
I'm double dosing. I'm doing double at the same time.
Right, here we go. We got 5 seconds until the US All Sessions open. What are we going to see? Are we going to see an Elon bounce? I think it's going to be a bounce overall, isn't it? Oh, what's that down 6?
Ooh.
Oh no, it was just a funny spread, I think. So Nike down 35 basis points at $76. What else are you seeing there, Rondog?
Just before we move on, it's interesting that Nike is sort of staying at that 75, 76 level. That's where we were talking about. That's the sort of true price point.
I'm short those 76s actually.
Yeah, so you must be happy now then.
Well, not if it goes through it. But yeah, I am short the 76 calls in Nike in the short term. I don't think it goes much higher than here. But Palantir is my other one. I'm short the 160 calls.
Oh, I love a bit of Palantir, mate.
Palantir.
But overall, it's nothing that's really catching my eye in terms of upwards. Yeah, Tesla is coming up a little bit after being absolutely hammered the past few days.
Mullard.
Yeah, I mean, I think if I was the part of the board of directors of Tesla, I'd put a mouth gag on Elon Musk.
Just focus on making cars and robots. Stop mucking around.
Yeah, I mean, if it were to just focus on what he actually does well, stock would probably be
400.
Yeah, easily.
Yeah, or do a takeover bid on Apple.
On Apple.
Yeah.
Do you mean the other way around, that Apple would take over Tesla?
Tesla, SpaceX, Twitter, combine them into X Corp, and then do a reverse takeover of Apple. Uber, up 60 basis points this morning at $97. You've got to think outside the box, Ronnie. Yeah. Broadcom, also up 60 basis points. So yeah, we're getting a nice bit of a bounce in these names.
Yeah, I mean, it's we see... Meta are still surviving after them spending about £1 billion, stealing the entire staff lineup of OpenAI.
Yes. Was it OpenAI?
Yeah, so they paid one researcher from OpenAI $100 million to lure him over.
Incredible, isn't it?
Yeah.
Is that your kind of bonus that you're seeing?
Oh, yeah, easily. That's why I'm here every day, 7 a.m., You know, they say nobody wakes up on silk sheets at 5 a.m. to go for a run. I'm that guy. I wake up at 4 a.m. on silk sheets.
Your girlfriend's got silk sheets, has she?
Anyhow, moving on to the market. Talking about the market.
Let's have a look at Tier 2. Tier 2 doing well. Alibaba up 2.5%. Are you holding Alibaba? We haven't talked about that for a long time. I think people have semi-forgotten about it.
I think Alibaba is an interesting stock because people they discount it due to the tariffs and whatnot, but Alibaba is so much more than just the online commerce. They have the Ant Pay, they have the Ant Financial Group. It's a massive conglomerate that has its hooks into all of China's consumers. No CCP pun intended there. But I think it's an excellent stock, and I think it's underrated because there's so much more that you get just in the e-commerce.
Yeah, absolutely. Micron number. Let's see where Micron is. Remember, that was Piers Buckworth's big shout that Micron had seen its highs and was just looking a bit overdone. And there it is on that set of numbers, jumped up to 134. He got me short there. And it's subsequently come off to 121. So he's absolutely right.
So you owe him a lunch then?
I actually bought him.
You do him, yeah?
Already. 100 and... What did I think I made about 400 from that. So yeah, I certainly buy him lunch there. Piers watching the show just fell off his seat. Right, anything to do today then?
Yeah, I mean, most of these companies are they're moving in the direction that you sort of expected them to. Nothing that's major that's really popping out at me.
Intel? 2209?
Yeah.
Any
you
interest?
need to speak to... No, absolutely not. Old dinosaur. You know how I feel about these dinosaur stocks.
Yeah, you're new age, aren't you?
Exactly. I'm avant-garde, my friend.
Now, talk about new age and avant-garde. Who have we got waiting in the wings?
Oh, yes, indeed. We got a big guest coming in today. The biggest name of them all. If you're talking about small cap, you can't talk about small cap without talking about my man Graham Dixon of GeForce Capital, who's coming in today. So you and me are going to double team him. I'm going to start off with the first part of the interview, and we're going to get the insights of the man who's been there and done that and know absolutely everything there is to know about UK small caps.
So, any questions? Andrew McKelvey, where are you? I know you're going to have a few questions for our next guest. Any questions about UK small and mid caps, get them into the chat and we will put them to Graham in 1 minute. There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. if the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hello and welcome back to Trade Live with IG. As you can tell, I'm joined by my good friend Graham Dixon, Mr. Small and Mid Cap. How are you?
Not too bad, thank you very much. And you?
I'm very good. Thank you very much for coming on. And as I gave you the sort of introduction, I told everyone and hyped you up that you're the UK small and mid cap guy. So today the focus is going to be just that. So the question of the day is how we can make AIM great again. So that's the topic of discussion today. But Graham, if you just want to kick us off with just a big picture on UK small caps. So many investors overlook the UK small cap today. Yeah. We look at the FTSE or larger US tech names. Yeah. From your vantage point, what's the real opportunity in UK small and mid caps that investors are missing today?
Well, I think in the last 4 years, we've been in a bear market in the small cap sector. The AIM All Share index has virtually halved. But since Liberation Day, which was, I think, was it 2nd of April?
2nd of April, indeed, yeah.
There's been an ironic shift towards UK small caps. And it's been very aggressive, in so much so that it's actually gone above that 20% percentage move that would take you out of a bear market. And I think people's attentions are now returning back to the UK and also back to small caps.
Do you think the sort of increased risk and volatility in the US and the larger cap stocks have led investors to sort of look elsewhere in the smaller markets?
Yeah, I mean, there's anecdotal evidence, that there's a flight of capital coming over from the US over to the UK. Yeah. And I think the returns that perhaps people were expecting in the US, with the Magnificent Seven, those returns really, you don't really find those in FTSE 100 stocks. So you tend to find those in the small and mid caps.
It's very interesting. I'm just going to take this off before I get cancelled. Someone thinks it's a MAGA hat. But speaking of the sort of volatility that's come with the larger cap stocks, there's also obviously volatility and sort of not always the best liquidity in these small caps. Yeah. And that's one of the biggest concerns, that there's a lot of volatility and not a lot of liquidity. So how should a sophisticated investor think about these risks, and are they sometimes overstated?
No, definitely not overstated. Yeah, I think sometimes you have to make your trade commensurate with the size of the business. So you don't want to be, if the company's market capitalization is, £10 million, and you put £1 million into that business, you are stuck. Yeah. You have to wait for a liquidity event, and you could be stuck for years, depending on the sector and the stock. So yeah, sophisticated investors should know that size, you position your size according to the size of the company you're investing in.
And do you have any sort of guidelines or in place that when you are a new investor coming into UK small caps, maybe not buy 10% of the company straight away, but do you have any sort of guidelines or risk tools that you use when you invest in small caps?
Nothing like specific hard written rules, but just common sense more than anything else. So position wise, if it's a sector that is, like, for example, everyone's seen what's happening on the Bitcoin treasury space. Yeah, the liquidity has exploded. You could probably position your size as perhaps a little bit larger than you normally would, but there's a chance at some stage that enthusiasm for the market is going to stop. And if it does, then you could be the last one holding the ticket, and that's not what you want to have.
That's never really a place you want to be.
No.
You touched upon my next question a little bit. So both you and GeForce Capital, which you are running, you're active across multiple different sectors, across from mining, energy, tech.
Yeah.
Which part of the UK small cap space do you find the most compelling right now, and any particular reason?
Right now, I think anything to do with rare earths. I mean, you've got to read the room. So read the room. Trump has been saying we've got to have something to do in the Ukraine because of their rare earths. You see China now putting export restrictions on their rare earths. So anything to do with rare earths is a really exciting area. But there's lots of, traps, liquidity traps being one of them, and sort of management risks and country risks and things like that. So you have to really kind of do your research before you go into that field. Again, copper mining, I don't think it's going to go away. The whole thing about electric vehicles, now data centers for the AI centers. I mean, that copper is just going to be a theme that runs and runs. Artificial intelligence is going to be a theme that I think will be very topical. It's more topical in America than over here. Don't think we've quite grasped it, but I suspect we will start catching up in the not too distant future.
Well, one would hope so.
One would hope so.
Yeah. So let's say I've now found an industry that I'm interested in. I say, you know what? I think Graham, he's making sense here. Copper and rare earth, that's the sector I want to allocate to.
Yeah.
So once I've found the sector that I want to allocate to, how would I, as maybe a first-time investor or even a sophisticated investor in UK small caps, how would I go about and actually finding a company that I'm interested in and that sort of fits those criteria that you talked about before?
Well, there's lots of different software you can use. So you can use these filter systems. Some of them are free. I mean, there used to be this website called Digital Look. I don't know if it's still around now, but you could filter sectors, and within that you could then look at things like market cap. If you're looking for something that's pre-production or actual production, those sorts of things, you can filter it down to a number of factors that narrows down your search. But there's other things that you can get now with. Am I allowed to say company names, or in terms of promotion of? I'm not paid.
Maybe producer Phil can confirm. It's all right.
It's okay. Yeah. So ShareScope, for example, they own Alpha Terminal. That's what we use in the office for helping filter what we're looking for. But ShareScope, they have their own brand called ShareScope and different memberships like Gold and whatnot. And these are fantastic tools that you can use to filter down your stock choice.
So was it Digital Look?
Digital Look. I don't know if it's.
And
I've got a feeling it might have been taken over. And also, there used to be Hemscott. That was like this big Bible of stocks. You literally back in the
sort of yellow pages of stocks.
Yeah, yellow pages of stocks. You literally go through and it would have P ratios and Sharp ratios and things like that, description of the firms and whatnot.
Even I remember the yellow pages. We had those back in Sweden, back in my old day,
Yeah, good.
In Swedish, it's called gula sidorna, which translates to yellow pages. Just straight up.
All right. Wow.
So
Bit of a mouthful.
You learn something new every day. UK small caps, how to say the yellow pages in Swedish.
Yeah, I definitely won't be saying that.
So with the given, there's a lot higher rates for longer in the US, and we're sort of seeing higher for longer here as well.
Yeah.
What's your take on the sort of current appetite for funding among UK small caps?
Yeah, good question. I mean, it's really improved in the last, 3 months since liberation.
So just in the past 3 months, we've seen
it's transformed. There was it was like a Gobi Desert in terms of funding. People were like, you had to do deals at massive discounts to the prevailing price. Now deals are being done at the current bid, sometimes at premiums.
Oh wow.
There's a sector in the market which is not part of the London Stock Exchange called Aquis. Aquis used to be the most illiquid exchange going. Now there are certain stocks that are trading millions of pounds per day. That would potentially be the whole of the year's trading on Aquis for the entire market on Aquis. So that's exploded. AIM is, I think, becoming a beneficiary of that, but also from M&A point of view. I'm not sure what's going to happen now the dollar has weakened so much against the pound, if that makes the private equity opportunities less attractive for American investors or not.
Yeah, that's a risk. Is that a big sort of liquidity event that small cap investors are reliant on, sort of a private equity exit?
I think actually that's, from my point of view, that's what I don't want, because many of the investments that I put my clients into, or my own money into, I want to see it get to its ultimate return. And so sometimes private equity kind of get in the way of what we want as the outcome, the final outcome. But sometimes you get this liquidity event, and then you just have to find another stock to put it into, or
we need to
put it into a brand new car or whatever.
Save our stock market, one would say, SOS. And with that, I'll have to thank for myself and my time. It's been a pleasure, Graham. I'm now handing over to my less handsome colleague, Richard. Thank you very much,
Thank you very much.
Graham.
Thank you.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Right, and here we are back. So, Ronnie's given the introduction. Now we're going to dive into some of the stock ideas of the best dressed man that we've ever had on the show.
Oh, thank you so much. Yeah, I better get a new suit now.
Now, what have you got for us here? I heard you talk about rare earths there.
Yeah.
Is there a stock in?
Well, there's one that you should put on your watch list. It's a company called Pensana.
Okay.
Ticker is PRE.
PRE. Let me get that up. Okay. There we go. Pensana Rare Earths.
Yeah, the market cap is about 180 million pounds. They're not in production. They should be in production late 2026, 2027. They've got an NPV, net present value, of about $1 billion. So what's that, about 700 million pounds?
Wow. In what part of the world?
Angola.
Right.
East Africa.
Okay.
West Africa, sorry, excuse me. And it's basically got one of the largest deposits of magnet metals in the world. They've just done an off-take agreement with Toyota. They've just done an off-take with an American refinery company. It's about 20,000 tons per annum. And what you tend to find with these rare earth plays is that as they get closer to production, the market capitalization tends to merge with the net present value. So you know, that's something to look forward to. There's not a huge
So
amount of time.
180 million against $1 billion worth.
Yes, yeah, and they're fully funded, so you don't have to worry about, you know, they're going to do a placing around the corner. They've just did a placing about a couple of months ago.
Right, and where's-
M&G got involved. M&G Investments.
Was this back here when you had the first?
No, I think it was in April, was it? I don't know. It may have been April, May. They did a placing at 35p.
Okay,
So if
yeah.
you can check. And that was really just to cover G&A, but otherwise they're fully funded at project level.
And just tell people what G&A is for cost.
Oh, sort of general administration, you know, just for the cost of running a business on a listed stock exchange.
And how long do we think until they actually start production?
Well, probably about 18 months from now.
Okay.
Maybe shorter. That's the general estimate.
Right.
But it's, you know, that's something I think, you know, is playing in the hands. There was an article in the FT today about China restricting exports of rare earths, and Trump was going to say, right, we're going to put the tariffs right up, and then the Chinese said, well, if you do that, then we're not going to supply our rare earths to you. So there's this kind of, you know, negotiation going on, which I think has made Trump sort of say, well, okay, we better back off China based on that potential threat.
Okay. So Pensano Rare Earths, UK company, but operations in Angola. Do we know what the geopolitical state of
Angola, it's interesting, as I looked it up before I came on the show.
Right.
They had a military coup that lasted about 26 years and finished in 2002. So that's 23 years ago.
Okay.
So it's pretty stable. I don't know where it is on the sort of, they used to have this Mo Ibrahim index, which measured political stableness in Africa. I'm not sure where they are on that index, but I think Angola's been pretty good. And in fact, one of my other ideas is actually very Angolan centric.
As well?
Yeah, as well. So
You're going to tell us that you've been to visit next?
not yet, but I may do in September.
Oh, really?
Yeah.
Oh, wow.
Not as holiday.
We had, here we go, there's from Britannica, Angola, southwestern Africa, and you've got a broad variety of landscapes, including bordering Namibia's Skeleton Coast. Wow.
Yeah.
So I do remember, so, and of course it's next to the DRC as well.
Yes.
The dangerous Congo. And we had, you can take the chart off there, thanks guys. We had a company, Central African Mining, that our analyst got really enthusiastic about in 2006.
Yeah.
And this thing went from 10p to 20 to 35, and then the hedge funds started getting involved, right? So it was copper production in the DRC. So my boss and another couple of people from Credit Suisse flew down there, and they got the helicopter into the presidential palace of the Democratic Republic of Congo. Machine guns everywhere, of course. They're, you know, treated very well, and came back, and they'd obviously went to visit the operations, and this copper mine, you know, had a lot of resources there. CFM was the ticker, and so the stock ended up getting up to 70 pence in a matter of months. They did a massive fundraise there. Never saw it again. Dropped down to 3 pence about 6 months later.
Yeah.
And ENRC ended up buying it.
Oh, yeah.
Which was then, of course, swallowed by Glencore.
Yes.
So now it's Glencore's DRC operations.
Oh, it's they've adopted that copper mine.
Yeah.
Yeah. It's such a shame when that happens.
It's,
you know?
But isn't it? It's an incredible area of the world, so naturally rich in resources.
Yeah.
And you get opportunities like these. But as I heard you say to Ronnie, measure your risk appropriately.
Yeah, exactly. Yeah. And don't forget to take profits at some stage.
And would you even take profits pre-production, or would you in this kind of thing?
Well, I think normally if you double your money, you question whether you should take half off. You should at least think about taking half off. You may not do that. You may not take any money off. You know, I've been in situations where I've been involved in a stock at half a penny and didn't take profits for, I don't know, until it was about at least 2.5p, and that was just to get my money back, and then the stock went to 40p. So,
Really?
Yeah. It was, yeah.
Is that one of your best ones?
It was one of my best ones.
Yeah.
But there was one actually better than that. But
Right.
Yeah. But yeah. So you know, that's down to one's personal resolve and mettle. You know, there's no sort of hard and fast rules about when you do it.
Right.
Yeah.
Right. Anything in defence world?
Yes. Interestingly, so the defence world is, as we know, dominated by large caps, mid caps, British Aerospace of this world, the Rolls-Royce of this world. You know, if you want to invest in that, you're almost thinking about investing for long-term slow growth with dividend returns and things like that. Yeah. But in the small cap sector, there doesn't seem to be anything until now.
Right.
So there is this company called Defence Holdings PLC. The ticker is Alert, ALRT.
Nice.
Yeah, nice. Now, this is a company, it used to actually be called Guild Esports, which was a failed esports business.
Called what, sorry?
Guild Esports.
Right.
Yeah, failed, it was an esports business. Sky heavily invested in it, but it just didn't work out. And so the main shareholders decided to have a word with the directors and change the theme. So they sold the esports business and basically put this, it's like a shell, but to actually invest in the defence sector, because we all know, if you read the room, defence spending is going for the roof. I mean, is the European Union, do they agree to do increase to 5% of their budgets, or is that no?
That's certainly.
Or is it certain country?
That's what America wants the target to be.
Yeah.
I think 5%. They agreed to
3%. Okay, 3.5%. Yeah. But still, this is just like a massive underinvestment that's been happening in Europe and the UK for decades.
Yeah.
And now there's going to be a seismic shift towards defence spending. So what are we looking at? We're looking at drone technology. We're looking at infrastructure protection. So one of the first things that Russia, when they went into Ukraine, is they took out their telecom systems. Yeah. So you're going to protect your ports, you've got to protect your telecoms, you've got to protect your power infrastructure, information versus disinformation. So what's real versus what's, this AI videos are getting better and better.
Goodness, yeah.
And then, imagine if we start seeing tanks crossing into, I don't know, France, for example, and how do you disseminate what, is that real, or so there's going to have to be sophisticated systems to just work out what is fake and what isn't.
Okay.
So I think this is a really
world of defence.
Yes, it is. So this company is looking at investing in, and just to put some caveats in there, they've raised £3.4 million at 0.325p. So it's a real penny stock. And their market cap pre-money was £2.8 million, but the money is subject to the FCA approving the prospectus and publishing it, as well as the general meeting which takes place tomorrow. So there's things, there's things that could go wrong that would unwind exactly what I've said. But if they do go ahead, then it's all about how the company then manages that money and what they invest into.
And have they sort of hinted in the prospectus what area they're going to focus on?
Well, 4 sectors. One is AI. Another one is in drones. I'll look at my notes here. One is protection of infrastructure, and one is to do, when I say AI, it's towards military planning. So looking at supplies and gaming out how a certain strategy would work against another strategy and finding out what the optimal strategy might be.
And I'm guessing in defence, you need to have people who are close to the government. Do they, do the management or these top shareholders, do they have that?
Yeah, the CEO, I think he was in the Royal Navy. They've started beefing up the board, ready for as soon as the general meeting, the prospectus pass. I think these get shoed in, so to speak.
Right.
And they have their own connections to governments or military connections.
Interesting.
Yeah.
And how do you see this potentially playing out?
I see this one getting a lot of interest from the smaller cap community, because at the moment everyone seems to be focused on Bitcoin treasury stocks, and that theme at some stage it's going to probably die down.
I went to the Peterhouse conference last week.
Oh yeah.
On Bitcoin Treasury.
Oh right, yeah.
And standing room only.
Wow. Okay.
And a queue of 35 people after the presentations.
Okay.
To shake Andrew's hand, and one guy thanked him for putting his 2 children through university.
Oh, I love
the share price gains.
Wonderful.
And you know, everybody taking selfies with him. You know, it was.
He has done so well. I mean, I remember seeing this stock on. I had a phone call from a mate of mine saying, "Have you seen this smart web company?" I said, "Never heard of it." He says, "On Aquis." I said, "Oh, okay." He said the stock's gone from 2.5p to 10p. So I then started reading about it and thought, well, I'll give that a miss. You know, I just buy Bitcoin instead. Why would I want to buy something that's trading 10 times higher than? And then he's just blown that theory out of the water by raising money at ever higher levels and using that to buy Bitcoin. And I mean, he's got like massive cult status now, and I think it's not just in the UK. I think it's certainly in the US as well.
Yeah. And
so
Japan, yeah.
And Japan. Oh, it's Japan as well. Okay.
Well, sorry, they don't have a listing. They've got a listing in Germany, and they're working on one in Asia.
Oh, I see.
I mean, Metaplanet in Japan.
Yes, of course. Yeah, of course.
Yeah.
So so I don't think it will go away for smarter web. I think smarter web's probably here to stay now for a very long time. But minds will start shifting on what's the next thing going to be. And I think defence, you don't really have that many companies on the small cap, in the AIM sector and in the small cap sector in the UK in general, that are involved in defence. And I think this is one that's got a good shout as any.
Well, they've got a nice website. Let's have a look at Defence Holdings, UK's first listed pure play defence platform, operating, that's nice, isn't it, in the intersection of software and security. And here we go, the leading technology to transform EU defence operations. There's the drones, the AI agents.
Yeah.
God, I'm such a sucker for this kind of stuff on a website. I remember Tariffs, a US, guess like a kind of caterpillar, but specifically for the mining industry.
Oh yeah.
And it had all these pictures. Now I'm in.
Yes.
Get me in.
Okay, yeah,
like
good.
Tonka trucks.
I think a website is actually, it's a good sort of shop window for your business, and sometimes you can see terrible websites, and that probably says all you need to know about whether to invest or not.
Yeah, if you can't take the time to do your website properly, but these guys certainly have. So there's details on everything that we're talking about. So Graham said drone warfare, AI agents, information, the AI fakes, there they are, and then the critical infrastructure.
Yeah.
Okay, that's a good one. And then we probably have time for one more.
One more, yeah. So again, another Angolan theme.
Right.
This one is actually with production. It's a company called Afentra.
Okay.
Ticker is AET. Market cap's about £100 million. And they are oil production in Angola.
Oil this time.
In the lower Congo basin of Angola.
Right.
They're on about, last year they were doing about 6,200 barrels of oil per day.
Oh, so this one's production.
Yeah,
Good.
production.
Good.
They're on a PE ratio of 3. That's it.
Against current production?
No, based on last year. So, but historically on a PE 3. But they've made some further acquisitions that will boost production going into this year and next.
Right.
It's run by a guy called Paul McDade, otherwise known as Paul McDaddy. He was the former CEO of Tullow Oil.
Right.
Now, I mean, when he joined Tullow Oil, TLW, if you can, I don't know how far you can span out on these charts,
right.
But on Tullow, he joined in 2001 when it was under a penny a share. And when he took over CEO, the day before he announced that he left, the shares were trading at £1.40, and it was been as high as £13 a share. So I mean, the guy, he can deliver over a period of time.
There we go.
There you go.
There's the life of Tullow. This one haunts me.
Oh, okay, yeah.
We were involved in this at Credit Suisse for sure.
Oh yeah. So yeah. I mean, he's very accomplished. And the company's, they've got, I think, $5 million of cash, net cash. They have a resource base of about 55 million barrels of oil. So they're not going away soon in terms of the disappearance. Yeah. So yeah, Avendra it's just a very, very cheap stock, very well run.
Okay.
Yeah.
And production increases coming in the next few years?
Yes, I think so. So I think there's been a little bit of, this year will be a year of investment for the company, and I think that will bear fruit next year and the years to come.
Okay.
But
cash generative.
Cash generative.
Okay.
There's a consensus target price of about 92p amongst the various investment banks that cover it, and they're currently trading at 46p.
Okay.
So it's all there in black and white.
And do you is it because of the Angolan risk that it's at such a low valuation?
I don't think it is. I think there is a general disinterest in oil and gas.
Yeah.
Because I think fund managers, nowadays, you've got your client base, your architects, doctors, and they're seeing people that have conscientious about the planet, and they're seeing their fund manager invest in oil and gas. They're going to say, well, look, I'm going to go with someone else that's a bit more. So you have this sort of. I mean, I'm generalising here because I know there's probably lots of doctors that love to invest in anything, but there's this whole moral compass and the way, the perception thing with fund managers. If you can put that to one side and just think about the opportunity of making money, and they are, Afentra stands for African Energy Transition, so they are thinking about, caring for the planet, but initially it's all about oil production. So I think that's the reason why is this sort of general disinterest from the market at large.
But that management, that gives you a real sense of security and experience, I guess.
Him and the rest of the team are very accomplished. Yeah.
In order of preference, out of the three, where would you rank them? Or
well, I mean, they're different risk profiles.
Mm-hmm.
So, for example, I mean, if you can just put Angolan risk to one side, I'd probably say Afentra is perhaps within the higher risk categories, lower risk, should we say?
Yeah.
Followed by Pensana, because they're fully funded, so you don't have to worry about dilution. At least for the next 18. So that problem's solved, and it's just in such a hot topical area. And then the last one is Defence Holdings, and of course, if they get the prospectus approved and they get the general meeting approved, then it's really up to the company to show their magic, and hopefully they'll do really well.
Excellent. Right, good stuff. So that was our small and mid-cap focus. Thank you very much, Graham, for coming in.
Thank you.
And dressed it up for us.
Oh, thank you.
I hope you're off somewhere special now for lunch.
No. I'm just going to get in my swimming trunks and get back on the desk.
And just remember, of course, we put the risk warning on with these stocks. I might say that US large caps are probably the most risky things that I see, but certainly with the AIM market, then you have to take account for that as well. So, use risk and sizing.
Sizing,
especially.
Yeah.
Especially
if you're using leverage as well. You have to be careful.
Goodness, yeah. These maybe more for the ISAs and the SIPs rather
Very
than.
much so. Yeah, I think so.
Good stuff. Right, thanks everybody for joining. I shall see you tomorrow. Please give us that like and subscribe as we go on. But thank you for joining us. Thank you very much, Graham.
Thank you.
Welcome back to Trade Live with IG. So, our next guest has mastered the art of making social media real, relatable, seriously impactful, and gives financial insights into mindset gems. Gabriel Nussbaum, how are you doing, sir?
I'm doing well. I'm very excited to be here today.
It is really good to have you in. This is a big jump for us. Because I think TikTok, you have 1.3 million followers.
That is correct, yes.
Does that just blow your mind every morning?
I try and ignore it as much as possible because it's probably more of a scary thing than an exciting thing every day to know that many people are watching and listening to things that I say about money.
Absolutely. And so it's taken you to the Bank of England. It's taken you to 10 Downing Street. Has there been a moment along the journey where there was a real, you can say, well, this is when it changed forever?
There's been a lot of moments along the journey that are incredibly memorable. I suppose your first viral moment on the internet is one to remember.
What was that?
My first viral moment was talking about lifetime ISAs. Quite a nice relevant topic, something that I think needs a little bit of a change, and maybe we can dive into that. But that was the first moment that I think a lot of people learnt about the ISA product, probably through social media on TikTok. It wasn't a platform built for education, but it's a platform that I've used education for. So that was a big moment. And then I guess first hate comments, being called Wallace from Wallace and Gromit. That was a lovely moment.
Where did they get that from?
No idea. And then probably a handshake with Keir Starmer is a pretty memorable one as well. I mean, some people might hate.
Bad?
I'll leave that to everyone watching.
But really, it's amazing how. Tell us how it first started, because where you are now, the actual story of how everything started is really interesting.
Yeah, so I was working at Barclays on a graduate scheme, commercial banking, so really nothing to do with the world of personal finance. I'm not sure there are many careers that are very similar to the world of personal finance. And I, just as a weird guy, thought it would be fun to start a hobby creating financial education on the internet, because it was a topic I was passionate about. I was teaching in my own little circles. It was the thing I was reading about. And everything I know is self-taught. There's no qualifications behind it, which some people might be like, oh, okay, let's not watch this guy anymore. But for me, that adds an element of trust and authenticity behind my journey, because I'm not telling anyone what to do. I'm just teaching as I go. So yeah, I was building this up side by side while starting a career for myself. And very quickly, one overtook the other in terms of what I really wanted to do for the rest of my life. And that was to become a financial educator.
Yeah. And so how long ago was that then, when were you at Barclays?
So we're talking almost 5 years ago to the day I started. COVID, a classic COVID one. I started my career during COVID, which means I didn't meet an employee for about a year, another employee.
Wow. So yeah, you can understand why you ended up, going down the online route then.
Talking to myself and going crazy on the internet. Yeah, absolutely makes sense.
You touch on that. Your videos they go so popular and viral, because it's you speaking to yourself, and it's almost like good cop, bad cop, devil on one shoulder, angel on the other. And I think that's what's so compelling about watching, because everybody's having these discussions to themselves anyway.
Yeah, it would be great, honestly, if I could bring in another human being into my studio and have a conversation with them. But until I have hired that person, I create these conversations, like you said, between two characters often. I just think it's a really engaging way to have like that look over my shoulder approach to personal finance. You have one character questioning something or not aware of a topic, and the other character can either explain it or challenge it. And this kind of dialogue does a really nice job of both giving you an end result, a lesson at the end of the day. But on top of that, it adds the entertainment value, which is really important when you're trying to teach, especially a younger generation, which my demographic are, which is normally 18 to 30-year-olds. You kind of need to trick them into learning a little bit. So that's why I add the entertainment into it as well.
Yeah. And then you share a lot of yourself personally, because it is that real situation. We spoke about rent the other day. Oh, well. But, how do you balance that sort of vulnerability, but then also have the boundaries as well?
It's tricky. It's something that I'm learning every day. I've definitely overshared a lot about my own personal finance, whereas I suppose, opposite of that, which I also believe in, is that I like oversharing. I think that personal finance is a topic we all know it's not taught enough in any level of education.
That's it.
But on top of that, the conversations in this country in particular are so limited. It's so taboo. If you look at like levels of different topics of conversations that people are comfortable having or not comfortable having, money quite often tops that list as the most uncomfortable topic. So even though I know logically that I want to be as open as possible and be able to share anything and everything, it doesn't mean that I haven't still grown up inside of a society that closes that down. So I'm caught in that kind of two minds and two different personalities.
Yeah, but it is becoming much more the way, isn't it? We know that Mia shares her running total of her investment portfolio. Yes. Laura's got a target that she really strides towards. So I do think it's becoming more common. And how is that received? Because you do these, is it Vox Pops they're called?
Yeah, I mean, it's received brilliantly because at the end of the day, people are so nosy. Like, they love knowing actual numbers behind what's going on.
Yeah.
So I do try and share as much of it as possible because at the end of the day, even just sharing, a salary that you're currently earning or you did earn a period of your life, which is often a question that you said with the Vox Pops that I ask people to try and share.
Yeah.
If you're sharing a savings amount that you've got stored away, if you're sharing a goal that you're trying to hit, when you put numbers to a topic, it starts to make things a bit more realistic because someone else can start to see, okay, I didn't realize that, the threshold was actually quite lower than I thought, or I'm actually a bit further away than I thought. I need to maybe ramp things up a little bit. But until you bring actual numbers into it, it's very hard. So when I speak to people in the street and I push them to try and give me some numbers behind the information they're sharing with me. So like, for example, a salary, it's a 50-50 uptake whether people are comfortable sharing it or not. Yeah. But I think once they do, like the engagement shoots up because people are like, I didn't realize that you could earn that much in that kind of career, or that's the average salary in the UK, or someone is surviving in London earning less than 40k. How is that even possible?
I had that conversation with a young lady who was starting out in a estate agency, and I think her salary was 23,000. And I made the mistake of asking, God, how do you survive on that in London? And it was a genuine question. It didn't go down well.
No. It doesn't go down well at all. But the reason why I put that 40k number in a second ago was because when I asked most people, how much do you think you need to live in London?
Yeah.
The responses are probably start from 70 and go upwards for a single person. And I'm talking a comfortable lifestyle, of course.
That's it.
But there are numerous occasions where someone says, yeah, I'm in the mid-20s, late 20s, early 30s in terms of my salary. And this is how I do it. Yeah. And to hear the start to like practical solutions and like things that they're doing to solve it doesn't mean it's easy.
No.
But it's a great eye opener for someone that does strive to maybe move to this area of the country.
And, people generally, do you find they're striving towards investing, towards the, you help a lot of people with their ISA understanding. Is investing the goal or are we still way off?
Investing is becoming a lot more popular. It really is, especially in young age groups. The biggest issue right now is misinformation with investing. So I think there's huge research to show that the 18 to 30 is one of the biggest ever age ranges in terms of what percentage of them are currently investing in some way, shape or form.
Yeah.
But that doesn't mean they're necessarily putting it in the right place because the internet is flooded with misinformation. You also ask them, where are they getting that information to learn about this topic? And the answer most commonly is the internet, social media, maybe through people like myself. So whilst, yes, it is becoming hugely more popular, which I'm a huge advocate for, so are the government with a lot of plans that they're trying to do and stuff like that, whether they work or not is another topic of conversation. And I think overall it is a good thing. The biggest issue right now is lack of access to accurate and positive information rather than people that are trying to take advantage of this young, maybe slightly naive age group that don't have the right intentions or aren't aware of what certain tools and products should be used for.
Yeah, I mean, not to put it out there, but the Dubai crew. We've all seen the Lamborghinis and the high living. And that's the stuff that's, it's so good to see people like yourself and the ladies that I mentioned coming through and really from a genuine educational view. That has taken you to speak to the government and the Bank of England. What kind of conversations go on at that level?
I think it's an education play still for them. Both of those organisations are obviously historical organisations. Bank of England, one of the oldest institutes in the country. The government. Yeah. But they're both having this play where they realise they cannot access the young generation anymore. They are really struggling through their traditional, I suppose, assets and media. Yeah. And they look at us as the new wave of being able to communicate things to again, this younger generation.
And the masses.
To the masses, exactly. I suppose the important part for us as people who have that level of authority or maybe influence on the audience that are watching us is that we're not there to be mouthpieces. We're there to digest information they're sharing with us and then translate it in our own language with our own opinions attached to it.
Absolutely.
Because I think the issue that you see with a lot of like mainstream media is that they will repeat word for word, verbatim, what is being said. Now, they're doing that not because they're puppets or anything like that. They're just, that's their job, right? To report, to say what happened. But if you're watching that as an everyday person, you're probably thinking, I've got no idea what that means. I've got no idea. You're still using technical language on the news. Whereas I will come in and say, an ISA is, and actually explain what an ISA product is before I then go in to explain the changes that have been made to it. And automatically that switches someone on. So I think that if we look at like the percentage again of people that are probably now aware of what an ISA product is for the first time, this is the change that we're trying to make. And I think that's what the government and the Bank of England have latched onto. They are aware that this is the change that needs to take place because ultimately it's where the attention is.
Yeah, and it's that really nice path into investing, right? The stocks and shares ISA is just, it's such a nice first step, right? Don't open a stocks and shares account, don't open a trading account until you've got that level of confidence. But that can really start with the ISA, can't it?
The ISA product is amazing. Not quite sure why it's being tinkered with at the moment, or potentially tinkered with.
Well, that's interesting, isn't it? Because it's, from my point of view, what's the point in a cash ISA, right? Because investing has outperformed by so much, but it really needs people like yourself to help educate the nation on what, what's safe, what's not.
Well, it's exactly what you said. It's an education play, whereas I think that the current rumours about the reduction of the allowance for the cash ISA isn't an education play. It's kind of like a force play. And I don't think you change a nation's habits through rule changes. You change it through education. So if I'm someone that's saving through the cash ISA product, whether we think there's a use for it or not a use for it, let's say that someone is using it regardless, and they get told all of a sudden that they can't put in above a certain amount into that. I understand the logic. Don't get me wrong. I really do understand the logic because you're shifting people. Maybe they're looking, okay, what other ISA products are. But I think psychologically, if I've got no information or education on an investing product, what I'm going to do is I'm going to shift my savings into non-tax incentivized saving accounts. And the government, okay, sure, they will raise more tax through that because people will start to go over, the tax saving thresholds. But will you see this huge shift into the world of investing? I'm really not so sure. I think it's an education play, and it's a change in the language that's used around investing products within this country. Currently, whenever you talk about it, and again, I understand why, but it's capital at risk. Your
scary 3 words.
Your capital might go down as well as up. Risk, warning, risk, warning. Yeah. And I do appreciate why that is, because all of those statements hold true. It just doesn't do any favors to someone who's thinking, oh, maybe I'll get into it. Oh, they see that risk. You know what? Like, I don't want to take any risks. Whereas if you start to explain how to mitigate risk or reduce risk, that is a much more, I think, appropriate way to shift people over into this new world of investing.
I guess it is part of the responsibility of the companies as well, isn't it? It's saying, right, we realise that you might not have the availability of the cash ISA anymore, or greatly reduced. But if you open the stocks and shares ISA, we'll pay you the interest rate that you would have got on the cash ISA anyway. So the fact that companies are moving towards that at least softens the blow. But do you have conversations with the FCA around, but I guess they're more the regulator rather than the educator.
They are definitely the regulator, and I think they are currently working with big institutions to help, in a way, push towards the world of investing. I mean, investing has been democratized like crazy over the past decade.
Wow.
And so I think that's why there's this huge play for everyday people that can get into investing. It's not like you need to call up your broker anymore and put in an order, right? You can click on a few buttons and you've invested in any company or any fund in the world at some of the cheapest prices.
Yeah.
So the FCA are making, I think they are definitely working this behind the background. But in terms of working with someone like myself, I mean, you see last week the report going out about a couple of arrests in the UK on influencers,
right?
A huge number, dozens and dozens of cease and desist letters going out. And I think what they're targeting are what you call the Dubai people.
Yeah.
You know, the people that are being flashy, trying to push people into high-risk products with very little warning and stuff like that.
Okay.
So the FCA are definitely focused more on that area of the social media world, which is good. Obviously, it's great to get bad people off the internet. What I really want and what I'm really pushing for is to open up conversations with this new wave of, I suppose, good players in the game, people that are really trying to impact and make a difference. And often when you do hear them talk about us, it's in a very short sentence and they lump us in with financial advisors and, you know, qualified people. But there are this new era on social media of journalists, essentially. Think about someone like Martin Lewis, not a qualified financial advisor in any way, shape, or form, a financial journalist. And we're kind of in the same bracket, but I think there's that gap there. The conversation hasn't really been open between the FCA and this kind of new wave of people on social media. And I think it would be a really useful conversation because I think we both have the same intentions.
That's it.
But we need to support each other rather than go, well, whilst keep going after the bad people, but lift up the good.
You need the clarity on where the line is.
Yeah, I mean, listen, there's a lot of guidelines out there, and I get nowhere near to the line. I intentionally have been trained on that. I know how to do that a little bit. But there are new people that are starting up that have real good intentions that need to be taught that from the start. And I think, there's a lot of things that need to be done over, I suppose, the next couple of years because the landscape is changing so quickly.
Now, so let's go back to the sort of technicalities.
Okay,
so where does the idea? Let's take an investment. Where do you get that idea from, and then how quickly does it become a video?
My ideas come from all different places. So I'm keeping an eye on the economy the whole time, the little changes that I can share. Hot and trending topics often come into play, and I will try and latch an idea. But a lot of the concepts that I make come from my own real life experiences, because I'm constantly interacting with money on a hourly, secondly basis. So a lot of these things, like from interactions with my friends, conversations with my partner, all that area hugely influences what I'm doing. Whenever I look at my investing portfolio and I make a decision or something like that, I will immediately go, well, how can I teach that within a lesson? So if we're talking about specifically investing, you know, you get around the April area, you know, ISA allowance, renews and all that kind of stuff. And it's a brilliant time to go out and create content about, well, how to invest from scratch again, you know? How to, your ISA allowance is renewing, that element of urgency, but not really urgency or panic or anything like that. It's when people are getting more interested. Around the January area where people start to set New Year's resolutions. And they start to think, okay, you know what, this is the year that I start investing. Again, it's a great period of time in my head where I'm like, okay, I'm resetting all of my things a little bit, my financial goals, my budgets, etc. Let me create content around that. And that's the investing side of things, I suppose, or whenever I get a question from my audience, because there's huge interaction. Social media isn't a one-way conversation, it's a two-way conversation.
How do you keep up with all the comments?
I don't.
It must be impossible.
I really don't. But when there's a good one, it will come through, and I will often try and respond to that comment in the most appropriate way possible. So I'm trying to think of an example. Often I'll get asked, well, what platform do you want to invest on? And my response quite often is, just start. Literally, just start. I think people overthink a lot of this stuff.
Because it can be quite intimidating.
Yeah, because when someone asks that question, the comments start to go with floods of different names. Start here, this reason, that reason, that reason. And so many platforms are suitable for so many different people for different reasons. But I still think that it's better to get started on the wrong platform, theoretically, as long as, you know, FCA approved, FSCS protected, all that kind of stuff. But to get started on the wrong platform than to have that kind of procrastination that stops you from getting started full stop. Because one of the best and quickest lessons I ever learned was putting some skin in the game is the quickest way to learn.
That's it, because you're focused and you really, you soon learn your lessons on a small amount.
It's exactly how I learned, right? Put something in, something that I was willing to completely lose. So I was aware of all of the risks around it. And it forced me to start learning. And I think that's probably done more for my education than any video course book that I've ever read.
There's a lot of our viewers, you know, mums and dads, a lot of the kids are studying for exams right now. But if you were going to say, you know, give one principle or one habit for a new beginner with even £100, what do you think is the best habit to adopt early?
Specifically with investing?
Yeah.
I think that one of the best habits is to just kind of start small. Because often people think there's a lot of reasons why people don't get into it. And one of the biggest ones is I don't earn enough or I don't have enough. But the truth is, like we said, the barriers to entry are being eroded so quickly that there isn't a huge amount that you need to start with anymore. So if I was to say, like, to build one habit, one muscle, it's just to start small, start where you're comfortable with, and then adapt and learn from there. And then I suppose if you can allow me like two, so I can do a bit of habit stacking. Go on. Once you have started with that really small amount, something insignificant that you've kind of testing out to get the feel for it, bring in the education play. I don't care where you get it from. If it's a book that you want to start reading, if you want to start watching this show every single day, if you want to go on YouTube and just start watching your favorite content creator who's talking about the topic. I think if you just do one small thing once a week, 10 minutes of your time, we speak about compound interest in investing, right?
Yeah.
The compound interest in education stacks up in exactly the same way.
That's I've never heard that before. I like that a lot.
That's everything in life compounds, right?
Yeah.
So the education play is just as strong as the investing play.
Right, let's. So, how do people find you if they have enjoyed this interview? And
I like that, a big if, right? If people have enjoyed. If you hate me, feel free to find me, hunt me down, and let me know.
Right, I'm sure we got some comments in the. But there you go on the TikTok. So, as we said, that money guy, Gabriel Nussbaum.
Yeah, Gabriel, that money guy. If you search that on all social media platforms, you'll find this beautiful non-Wallace looking face talking about finance in all ranges of topics and anything that interests me.
And so you must have been in early to get that title then.
Get that money guy.
Yeah.
Yeah. Someone said you should have gone with the money guy. It's too late now, isn't it?
No, like I think that's that money guy.
Well, that's where it came from. I was walking past someone and they were like, "Oh, you're that money guy on the internet, right?" And I was like, "That's got a ring."
Go on, to finish off, give us one of the funniest interactions you've had with a fan.
Oh, it's a fan or not a fan. I am horribly uncomfortable when people come up to me in the street, but I have to act very comfortable and all that kind of stuff. Yeah. But I think I was just on a plane going on holiday, and literally, like in front of me in the road, someone literally turns around and goes, "I really like your stuff." And I was like, "That's great." And then they proceed to sit next to me on a 4-hour flight. And I was just sitting there thinking they've come up to me, a stranger, saying they know me. Let's get the headphones in nice and quickly and just maybe pretend to fall asleep, because I was like, it's great when someone comes up to you and it's a quick 10-second interaction.
Yeah, of course.
4 hours is a little bit different.
Good stuff, right? Thank you so much. That's really been interesting stuff. And any big aspirations? So you've already done Keir Starmer. You've been there for Andrew Bailey.
Yeah.
What's the next?
What, DJT? The big DJT off in the US? Maybe I'll have a conversation with him one day. No, I think the goal for me would be if there was some level of formal education compulsory in the UK. None of this maths A-level enforced on kids until they're 18 or anything like that. Real financial education starting from, I don't care what age, 5, 10, 15, 20 when you leave school and university. If I saw something compulsory going into people's lives in the next half decade, I think that would be one of the biggest successes that I think I can make. Basically make me irrelevant. I'm more than happy for that to happen.